Hi, this is Kerry Artek with Wicked Stocks bringing you your daily Apple report for Friday, March 10th, 2023. Before we walk through all the charts today, just want to encourage you to please click like and subscribe to Wicked Stocks YouTube channel. Please share the content, if you would, with friends and colleagues, and check out wickedstocks.com, where we offer a full assortment of analytical videos on a daily basis, the Triple Q and the SPY. Throughout the week, we do 2 individual stock picks every week. On Thursday, we put one on Marvel Technologies, the chip design company. Let's see, what else? S&P 500 Index, NASDAQ 100 Index, the TLT, the Long Bond ETF, all on a weekly basis. So you get all of that for a very reasonable $47 a month. Check out wickedstocks.com. We offer a 5-day money-back guarantee, no questions asked. So here we are, big picture, working our way into the day. Once again, coming off the low 120 support in early January, the low 170s anticipated as a level that's in reach at some point this year. And in fact, on the way up off that rally, we did close above a meaningful channel top that is presently at 140.81. That was an objective as little as a week ago before this big rally that's occurred. I can't say that we came close to testing 140.81, but I was saying that the sell-off down to 140.81 was considered counter-trend in nature because we still remain in the grips of a 3 to 5 month buy signal above 140.81, anticipating the low 170s over that time frame. We're about a month and a half into that right now. Plenty of time for that to be realized. So now for the day itself. Let's check out, I'm going to go into this level here. Now, I wanted to underscore the fact that this speed line I've reduced to a mere minor point, 151.38. Still very tradable for aggressive day traders, but it is 150.26, this formation, this former channel top, that has also been part of that support area, and I'm just focusing on it for the day. It can, 150.26, contain selling into later next week. We can come off of here nicely. For the day, we could come off of nicely. Maybe for the day, given the fact that this is an unemployment Friday, a higher volatility Friday, perhaps we reach 157.50 by the closing bell. I don't know. On the way up, 153.98, we'll have something to say about that. It can contain intraday buying pressures, 153.98. It's an upside Fibonacci. By the way, Thursday's upside Fibonacci held pretty well in the 154 handle. The same 5/8 to the upside right now off the last 4 days is 153.98. It can contain intraday buying pressures. In fact, that is sort of the day trade right now, buying 150.26, assuming we open above it and taking profits perhaps at 153.98. If you don't take all of your profits and we push through 153.98, my suggestion would be to hold out till the closing bell at 157.50, because we could actually test 157.50 with the presently heightened volatility. It wouldn't entirely surprise me, and that is the October high from last year. We came very close to testing it a month and a half ago at 157.38. So I'm not expecting that. I'm just saying that we are testing decent support right now at 150.26, assuming it holds, and above which we can push into the upper 150s, as I've been saying, over the next week or two. Potentially by the end of next week. 159.70 is once again that long-term descending 2/3 speed line and combination 5/8 Fibonacci area that, if tested, say between now over the next week or two, can absorb at least weekly buying pressures, potentially well into April. We could fall off from here, and it would be a settlement above 160.49 that would set us up for another 2 to 3 week rally into the low 170s, where Apple could actually have real trouble into later year, fall off from here, and if settled above, I might add, would present a long-term buy signal for Apple through the rest of the year and probably well into next. But we're nowhere near that right now. In fact, I'm going to go back to this chart, 150.26, breaking or opening below it. Expect at least 148.64, but I really think if we do break or open today below 150.26, you should expect 157.36, which is this rising 2/3 speed line that managed to capture the lows from about a week and a half ago, and it can continue to do so. Now, on the way down, for you aggressive day traders, 148.64 offers decent intraday support. We can bounce here back to 150.26 within the day, trade inside this zone for a good portion an hour or two. I don't know. If we break, though, 148.64, get out of the way for 147.36 or go short to 147.36, whatever that might mean. I will say, as I just said a moment ago, if we break, especially if we open today below 150.26, 147.36 is in reach today, where we can bottom out through next week and from here turn higher again beyond this high area within a week or two of doing so. Within 2 to 3 weeks of testing 147.36, we can test that upper 150s, low 160s I just showed. But if we do close today below 147.36, that merely represents what I would consider to be about a 3 to 5 day sell signal into the lower 140s. Once again, then anticipating this descending channel top at 140.81, where we could actually bottom out through the rest of the second quarter and from there consolidate, turn higher again as we move into Q3. I'm not expecting it anytime soon, but if we were to close below 140.81, that doesn't look very pretty as we move into April, May, June trade. We could and probably would unwind all the way back into the low 120s again, where we find ultra long-term support, able to contain selling through the rest of the year. But I digress. In terms of, I could articulate, I suppose, the options trade holding above 150.26. If you bought those 159, 160 out of the money calls, anticipating that price area, you can hold out for that. You might, depending on your time horizon and your tolerance and your risk management, even if we break 150.26, you could hold out for 147.36. In other words, if you bought those 160 calls, you could hold out for 147.36. But if we close below 147.36, I would actually liquidate that out of the money call because I don't think we're going to see it anytime soon. We should then, by the end of next week, fall to 140.81. And that is the 3 to 5 day swing trade, actually. The 3 to 5 day swing trade turns bearish below 147.36, playing the short side down to 140.81. The 3 to 5 day swing trade is still bullish above 150.26, anticipating the upper 150s, low 160s, possibly by the end of next week. I think that pretty much rounds it out for Friday's Daily Apple Report. Please click like if you would, and check us out at wickedstocks.com. I'll talk to you Sunday afternoon with Monday's Apple Report. You have a great weekend.